Hello and welcome back to Trading with CJ. Now today we're going to be talking about a very popular company, and that is Adidas. Now Adidas is one of the biggest sports brand companies in the world with a market cap of around 48 billion at the moment. Now with that being said, we don't really hear of many people talking about or buying this stock. Now if you checked it out, you'll know that is very similar to another stock analysis I did recently on a company called TUI. And like Adidas, TUI also happens to be a German brand. Now that's not necessarily a theme I'm going down, that's just more of a coincidence. But if you want to check out my TUI stock analysis, I'll leave that in the link in the description below as well. Adidas is one of my favourite brands. I own lots of their clothing, their trainers, etc. However, does that necessarily mean that I want to buy shares in them? Well, today we're going to take a deeper dive into the Adidas stock and we're going to see if this company is a potential buyer. Now, I'm not a financial advisor, so if you are planning on investing into the stock market, you should always do your own research first. Now, as usual, if you find this video interesting or useful, please hit the like and subscribe and leave some comments down below. It really does help out my channel. So let's get into the Adidas stock.
So if we look at the Adidas stock here, we can see the market cap is currently at 48.6 billion at time of recording that. This is in euros, as I've already said, because this is a German stock. And if we look at its share price, we can see that at the time of recording, it's currently at 249 euros roughly per share. And that has pretty much been the case. It's been around about 230, 240 odd since the last month or so. The drop obviously happened back in February when it dropped down to a massive, a really low actually, 166.92 euros. So that would have been an absolute steal if you got it in there. You would have already over doubled your price, doubled your return on that if you did get in around that amount, which would be really good. It was trading at all-time highs of around about 316 euros per share back in around January time. So you've gone from 316 euros per share, all-time highs, to all-time lows of 166. It's now obviously somewhat recovered, and we're now around about 249. If we look at the graph, the past 5-year graph, we can see this company has been growing and growing. If we go back to 2015, it was trading at about 63 euros per share, and it has slowly grown and grown all the way up to its obviously highs of 316. So this has been a very nice growth company. Obviously it has been affected due to the crash, and it started to recover again. Now, according to analysts, this company is actually overvalued at 37.7%. Now, that's because this is a growth company. We can see the PE ratio is 19.61. That PE is actually not that bad. In my opinion, that PE is quite a good PE for a company like this. But the price is overvalued, according to analysts, at 37.7%, with the fair value being 180 euros. If we just compare this with a company like Nike, for example, they are also predicted to be overvalued as well, around about the same, about 35-36% as well. So I don't think that's anything to really worry about with this sort of company, because the PE ratio is actually not that bad. If we have a look at this PE ratio just here, we can see that the company there is 19.6, obviously, which is just slightly less, or pretty much in line actually with the industry of just 20, and the market of 21.5. This market is obviously the German market. And the PE ratio for Nike is much higher. Just to mention with Nike, obviously the market cap for Nike is a much bigger company. It's trading at 154 billion or something around that. It's a much bigger company, but you can still compare them in terms of their PE ratio and their future growth, etc., as they are in a very similar field. I'd like to see here the future growth. The future growth for Adidas in the next 1 to 3 years. This is based on 34 analysts as well. That's quite a lot of analysts. It's 34.9% forecasted growth, which is a very good growth. And we can see here the earning revenue, this is when it goes down to it. Obviously, it's dropped off massively, and it's going to start recovering around about 2021. That's dropped all the way down to December, and then from January onwards, we're going to slowly start seeing a recovery, and it'll probably eventually get back to those massive figures there of a revenue of about 44.95 billion, which was huge for this company. 47 billion actually, I should say, back in December last year. And comparing that future growth there to the industry, again, it's slightly less compared to the industry, but it's way more than what the market. And I think that's pretty good future growth in the next 1 to 3 years, 34%. Pretty good in my opinion. The EPS, so the earnings per share for Adidas, obviously it has dropped off massively. It was going to be getting around 19 euros per share and going to be down to an average of 2.1 euros. Once again, analysts are predicting this to slowly start recovering. The reason for this is obviously we know that their Q2 earnings have recently come out, Adidas's Q2 earnings, and over 70% of their stores were closed. So that was a massive amount there. 70% were closed, and that has obviously hit them hard. Hence, a lot of their revenue is down on what it was. However, the future prediction here, the future return on equity in the next 3 years, this is what we like to see as shareholders. We want this to be a nice figure, and it is. It's 25.6%. So what a nice future return on equity there if you was to hold shares in this company. We can see the past performance as well, 35%. So it's generally been growing over the years. Obviously, that has dropped off, as we know. However, over the years, like I showed you the growth at the start on this share price, it's been very good. Jumping into some of their earnings revenue history, we can see it's always been slowly increasing. We had a massive shoot up there in 2018, hitting a profit margin of around about 8%. And now they are still in profit. They have a profit margin of 5.6% at the moment. So it has dropped off, obviously, from the 8.1, but it is still making that profit. The current return on equity for Adidas is 38%. When we look at the industry's current return, just 5.7%. So this return on equity is huge compared to the industry in holding this company. Probably hence you can imagine that this company is quite overpriced at the moment, according to analysts, because you're getting a kind of a lot for your money, so to speak. Now, what we really want to see here is we want to jump into their balance sheet. And as we can see, this is quite a good looking balance sheet. It's by far not the best, but their assets short term, the 10.93 billion, obviously we're in euros again, outweighs the short term liabilities and the long term liabilities as well. That is good. That's a healthy balance sheet. You don't want it to be the other way around. This company has a lot more assets, basically, than liabilities. And if we actually jump into its debt to equity history here, we can see it's got quite a low debt to equity ratio of just 43.5%. Obviously, it's not the lowest. 0 will be absolutely amazing. 20% would be good. But it's 43%. That is pretty good. And it did have a really nice debt to equity of 23% back in December last year. But obviously, due to what's happened come March, it was at 36%. And now it's even more. It's 43%. So, it has increased its debt to equity there. But that's still nice and healthy. It's not 100+%, which is what we wouldn't want to see. So jumping back into the balance sheet then, we can see that the debt there is what we don't want to see, and that's in the red. That's 2.8 billion. But if we look at the short-term investments and cash, we can see it's currently at 2.4 billion. So if they wanted to, they could pay off quite a lot of that debt and get that right down. We can see that they've got long-term and other assets, 5.6 billion as well. So in all fairness, this is quite a good-looking balance sheet. So I just want to cover some of the numbers from the Q2 earnings report that has recently come out. We know they had 2 billion in cash, and also revenues are overall down 34% in the last Q alone. They're currently making a net loss of 306 million euros compared to the previous year of an income of 462 million euros, which is obviously down quite majorly from where they was last year. I don't think they're going to be too worried about this because they have seen the trend starting to improve towards the end of the Q, and they are predicting that in Q3 they have an outlook of 1 billion of operating profit compared to Q2. So that is really good, and things are on the up for Adidas. It's also worth noting that 1/3 of Adidas's sales is generated from online sales, and online sales increased by 93% in the last quarter. So that pretty much almost doubled there. And obviously a lot of companies are moving online now. Adidas is improving its online sales, and it has a good outlook for the upcoming quarter. So moving on to the dividend now. Obviously the dividend has been cut, but it is forecasted to be 1.35%, which is nice. It was growing, and then it obviously got cut. And it is predicted to be back on the up come December. So as early as December, this is planning on being reinstated. So I guess we'll see what happens with that. but the future payout for this is predicted to be 41%. So that's quite nice, and there is lots to look forward to with Adidas.
Now, another thing worth mentioning with Adidas is it's obviously a very, very popular brand, and it's endorsed by lots and lots of celebrities, helping massively with its marketing, etc. Beyonce has a chain with them, Kanye West, two very, very popular celebrities. Not to even mention all of the sports teams, football teams, etc., wearing the Adidas kits and so on. So it's very, very good at marketing with celebrities and stuff. So if, for example, these celebrities brought out a new clothing chain, the share price will probably rocket up if it's a very popular celebrity. But that is also a downside because it's very reliant on its brand value. And if it was to fall out of favour with its consumers for whatever reason, then we could also see the share price immediately get slashed on this company. We've seen it with other sports companies as well. Whilst this is one of the stronger players in its field, there's nothing to say that that couldn't happen. Obviously, that's a risk with any investment, but as this is very, very reliant on its brand value, it's a slightly higher risk in my opinion. But with that in mind, looking at their figures and their balance sheet and their fundamentals, etc., I do really like Adidas. As I've already said, I'm a massive fan. I own loads of Adidas clothes, etc. In terms of their stock, will I be buying it? Well, I do actually own a very, very small amount of Adidas. And at the moment, I won't be adding to that. I also won't be selling it. I think it's a nice buy and it's already in profit for me. And I think it will continue to go up. But I will not be adding any more to this position. But I can see the reason that you may consider it. It's a great alternative to Nike, which is obviously one of the leaders in this field. Now, if you've enjoyed this video and you found it useful or interesting, please hit the like and subscribe to my channel. It really does help me out and it's greatly appreciated. Let me know in the comments below your thoughts on this brand. Is this a stock that you've considered buying? Maybe you hold, maybe you don't. Let me know. That'd be great to see what your thoughts are as well. So thanks for watching, and until next time,